Hi, folks. Today is Monday, the 6th of April. I hope everyone had a great long weekend. And now we're back to it. And the dead cat continues to bounce today. Market is not moving a lot. It's trying to make a little move higher, but it's sitting in a really, really critical zone right now. I'll show you that in a minute. We'll talk about all of this. But first, I want to talk about a very historic event today, the Artemis lunar flyby. This is the timeline for today. It's right now it is 11:20 a.m. on the East Coast. These are all East Coast times. So at 1:30 today, they'll review the science objectives. At 1:56, right around 2 o'clock, Artemis 2 will be further from Earth than any human being ever in history. 2:45, lunar observations begin. So sometime around 3 o'clock today, they will be circling the moon, and I'll show you what the trajectory looks like. It's pretty fascinating, actually. And then all of this today is a really important day, Earthrise, when they will actually see the Earth rising over the moon at 7:25 p.m. tonight, East Coast time. So keep an eye on all of this. It's going to be a really exciting, interesting day. Here's what it looks like. You can find this on the NASA site, by the way, nasa.gov. So here's Earth, of course. They did a couple of circles around the Earth. They came across this way, right here. They did some burns to make sure that they were on the right trajectory. And right now, they are right here. Notice the moon is way back here. So this is pretty amazing, the math involved in making sure that, when they were leaving the Earth's atmosphere and starting to travel, the moon was way back over here. So they have to time this perfectly, and they haven't really met the moon yet. They're actually just starting to go into the orbit that the moon is on, and they will then kind of sit back here and wait for the moon to catch up with them. And then the moon will pass in front of them, and then all of those things I just showed you with the Earthrise and all of that will happen right in this period right here. Well, they'll make a circle around the moon and be further than any human being when they get to this point right here. This is the lunar flyby, 4,700 miles beyond the far side of the moon. So think about that, 4,700 miles beyond the moon. And then they will begin their return journey back to Earth. And right in here, they'll do another burn to make sure that the trajectory is correct. Remember, the Earth is moving too at the same time through space. So the Earth's not just sitting here waiting for them. The Earth is moving through space, so they have to make sure the trajectory is correct to get back and land in the ocean again. So pretty amazing stuff. So keep an eye on that. That's a historic day today. We'll see how it goes. And let's get back to the market, see how historic this is going to be. First, let's take a look at the 10-minute charts just to see where we are so far in this first day of the week. Right down here. And I also put in the daily expected move. So we're sitting right in the middle of the daily expected move, just kind of going sideways. Not doing too much, trying to make a breakout, but not really accomplishing that. Money flow looks okay. Technology is kind of flat. You see, all of these things are not moving too much. So there's not a lot of rotation going on. Here's the defensive sectors. They're pretty much flat as well. Real estate's up a little bit. Healthcare is down a little bit. But really not too much movement other than materials is down. So we'll look at gold and see what that's doing. And energy is pretty flat too. After a huge run higher, energy is now pulling back, but right now it's just pretty much treading water. And then the rotation charts, growth versus value, and these are all flat as well. Discretionary versus staples, technology is up, semiconductors are up, and transports are up. So that's all bullish. That's good news. Here's the breadth. You can see percent above the 20-day is now above the 50% level. So it is heading higher significantly. You'll notice right here where the price was lower and this was a little bit higher, but even if it was equal, that's still a bullish divergence. So this shows you a bullish divergence. There's a bullish divergence on the 50, bullish divergence on the 100. That's a little bit negative on the 200. And then the bullish percent index does not have a bullish divergence because this one went lower at the same time. This one went lower. but it is now moving higher too, trying to get back to the 50% level. So overall, the market looks like it is treading water. It's sitting right at the 21. It's at a very critical juncture right now. I'll show you that in a minute. Here's the small and mid caps. They sold off in the morning, trying to make a little bit of a comeback right now. And then we'll look at the NASDAQ 100 doing the same thing, but actually looking a little bit weaker. So the NASDAQ is actually got a red bar right now today. So the NASDAQ might be moving down right now. Now we had a great jobs number on Friday. So I think that's what pushed the market up initially this morning, but we've got a terrible CPI number coming. I'll show you that in a minute. That's coming up on Friday. I thought it was the 14th, but it's actually on the 10th. So Friday, 8:30 in the morning, CPI inflation is going to come in, and it will come in much, much worse. I don't know if it'll be worse than expected, but it will be worse than it's been for quite a while, a couple of years actually. So actually, let's look at that real quick. So here is the estimate CPI. You can see right here, April the 10th on Friday. It is expected month over month from 0.3 to 1%. That is a huge increase, huge increase. Core is not going up as much, but look at the year over year, 2.4 to 3.4. That is a huge move for CPI. And if we go back here and look at CPI on the website back here, CPI headline, you can see I've talked about this before. The base effect is a 12-month window. It's an average of the CPI readings over a 12-month period and just simply math. So if a small one drops off, which is what's happening this week, and a large one gets added, it is going to be outsized. It will be much larger than even the actual CPI is because the small one is dropping off. So the average will increase dramatically. It's going to go from 2.4 to 3.4. Could it go even higher than that? It could actually go higher than that, although that expectation is will be pretty hard to beat. But if we look at commodities, you can see right here what they look like. That gray area is what the report will be for. They have just been screaming higher. Everything, food, energy, gas, oil. Copper came off a little bit, but it's starting to move back up. So all of this is going to play into that CPI number. It is going to come in very much hotter. It's going to take any rate cuts off the table. In fact, it will probably increase the odds of rate hikes. And that will not be good for the market. It won't be good, especially for small and mid caps. So if you're in those, you might think about moving your stops up or protecting some of those profits. But this is what's going to happen on Friday. So that dead cat might be ready to bounce. Be very careful. Let's go up here and look at the consecutive down weeks chart. I put on here, I did a session last week on the JP Morgan collar. I encourage you to go look at it if you want to understand what this is all about. In fact, I think I'm going to put it in the Technical Tuesday section because this is pretty important. So I put it in for Q1 and for Q4. Notice what the price, this is a weekly chart. So this is week over week. I did this for the analysis I did for consecutive down weeks. You can see we've had 5 consecutive down weeks in Q1 so far. 5 consecutive down weeks has only happened 4 times, including this one. So only 3 times before this, going all the way back to 1980. So I said last week that it would be very rare for us to go 6 times. Now, there were quite a few that were 6 times down, but most of these, all but 2, in fact, were in secular bear markets, which we are not in. We are in a secular bull market right now. And then when you get to 7, 8, and 9, those are extremely rare. 7 was 1980 and 22. 8 was 2001 and 2011, and 9 times in 2002, interestingly. That's when the Fed was raising rates. So that's where we are right now. Here's where we are for the current Q2. And you can see we're just above the midpoint. The purple one here is the midpoint. I'll put a legend over here for what each of these means. But right now, this is the top. But you can see what it did the last couple of quarters. Q4, it kind of stayed in the middle and gravitated up towards the top of the range. Q1, it stayed in the middle until halfway through and then gravitated to the bottom of the range. The red one down here is the extreme. That's the extreme that JP Morgan has insurance. Think of that as this is insurance to the upside and the downside, and then the extreme. And the pink line is just the midpoint between the green and the blue. So right now, if things go as normal, then it likely will do the same thing. It'll be hang out somewhere here in the middle. Likely won't go above the maximum here, which is at about 68.50. So don't expect us to get back to 7,000 in this quarter. And we could get down here as low as 61.50 down at the bottom. But most likely we're going to gravitate right around this pink line, right around the average. So keep an eye on that. And let's also look at what this looks like right here. You can see we're sitting right below a very important level. This is two Fibonacci levels right here, right? Just basically right below where we are and right where the 21, the 21 is right up here. So want to watch this level. That's going to be really important. This is why I say it's a dead cat bounce. So if we break through this, then we might have more momentum to the upside, but most likely, especially with that CPI coming up on Friday, I wouldn't be surprised to see us just hang around this area until Friday, and then we will reverse and maybe even go lower than where we were before. So keep an eye on that. A lot of this might also hinge on the what happens in Iran as well. Who knows what's going to happen? Nobody knows. So keep an eye on that. So one other thing that I put together is this is from an idea from a subscriber using the relative rotation graphs. Actually, let me actually show you what the relative rotation graph looks like. So this is a relative rotation graph put together by Stock Charts. Julius de Kempener came up with this idea. Basically, it compares, and I will turn all of them on. So there's all of the sectors right here. And we'll move it to where we are right now. And you'll see most of the sectors, energy is way out here leading, but this is divided into relative strength on the bottom. So the x-axis and the y-axis is relative momentum. So if it's to the right, that means it is, and to the right and above the 100 line, has relative strength. And relative momentum, if it is above. Relative momentum and relative strength if it is to the right and above. That's how it works. So that's the way the rotation graph looks. If I want to look at just one of these, I just click on it. And it shows me over here, technology is moving from the weakening to the lagging and trying to move up now into the improving column. So it's gaining some strength, gaining both momentum and relative strength, but it is still in the lagging quadrant. So that's not good. Let's look at discretionary. Discretionary is continuing to go down to lagging. Let's look at financials. Financials is reversing, coming back up. But all three of those are down here in the lagging quadrant, with healthcare sitting down here in the weakening, and all the rest of these mostly are defensive sectors sitting up here. So take that idea in mind, and Stock Charts has a graph or an indicator that shows you relative strength. This is the RRG relative rotation graph, but it shows you the data, the actual data for relative strength and relative momentum. So you can see this is XLK for technology. Relative strength is 100, so it is pretty much equal to the S&P. This is based on the SPX S&P. And relative momentum is at 99, just a little bit below. So technology is, you can see the actual chart, you can see the graphs right here, and you can see the trend that's included with them. Now what I did was right below it, I put the ADX line, and below that I put the XLK SPX. So how is it relative to the S&P? You can actually see at 0%, it is equal to the S&P. So that's what that looks like. It's interesting. It's kind of interesting to watch where it is and how it changes, especially when the relative strength is moving up. If the price of XLK is moving down, that means even though it's moving down, it's not moving down as quickly as the S&P is. So it's outperforming. But the most important thing down here on the ADX, like I've always talked about, is the red line above the green. So the red line implies that bears are in control. That happened right back here in January, and bears have been in control ever since, and they're gaining even more control because it's getting wider. The space is getting wider between them. So that's the other thing to keep an eye on. Now, what I'm going to do, because I haven't added these to the other symbols, the other sectors yet, but it's easy to do that because I put them all in a chart list. This is a little Stock Charts 101. I created a chart list called RRG charts, and I put in all of the sectors with these charts right here, but I did not add the comparison to the S&P, this bottom one down here. So what I'm going to do is apply chart style. So that's this chart style. Apply that chart style to everything. And now all of them will have the same chart style. So now when I move forward, excuse me, you'll see XLC now is outperforming the S&P. So now this is included in each of the charts. So just an interesting way to look at things, see what the market's doing. Let's take a look at the dashboard real quick. We'll look at the three side by side first. S&P sitting right, really important level, right at the 20, just below the 21, but also below the 200. So this right here is the area, especially when we're in a red zone like we are right now. This means the 21 has crossed below the 50. So this is a medium-term red zone that we're in. And even if we get a breakout above these two levels, staying in the red zone should still be caution. So we want to really see a lot of strength if it's moving up into this area, because it could get rejected here at the 50 as well. But right now it looks like it's getting rejected at the 21, but we've still got half a day left. So we'll see what happens. But keep in mind that CPI report on Friday, that's going to be really, really important. All right, let's look at the Russell. Russell, here's the 10% correction level. And you can see now it's above its 21 and above the 200. So it's actually looking healthier than the S&P, but still in the red zone right now. So there's no confirmation that that one is breaking out. And then finally, let's look at Bitcoin. Bitcoin actually is having a pretty good day today. So Bitcoin is moving up and getting ready to break out of this downtrend line right here. Oh, not that one, this one. There's the downtrend line. And this one right here was right at the top of this big white candle back here. By the way, for those using stock charts, if you want to keep a straight line, one of these horizontal or vertical lines, I'm going to click on the little anchor right here, and I'm going to hold the control key down at the same time, and that will keep it straight all the way across. So if anybody's ever wondered how to do that, that's the way you do it. Just use the control key and it will make it a perfectly straight line. So you can see right here, Bitcoin is at a really important level. It's at the downtrend, getting ready to break the downtrend. Also could break this horizontal support line from the white bar back here. And that's where we are. So it's an important day for Bitcoin, important day for everything. All of this may change dramatically on Friday. So we'll see what happens. All right. I think that's everything I wanted to show you today. Let me know if there's any questions, comments, anything you want me to follow up or check out for you. I'd be happy to do that. Thanks for watching, and keep an eye on Artemis and Orion. It's getting ready to, the moon's getting ready to catch up. They're basically just went through the moon's orbit. They're sitting over here on the other side waiting for the moon to show up. So the moon's going to pass right in front of them and the Earth. We'll lose communication when that happens, but they will actually see the dark side of the moon. I hope they're playing Pink Floyd when they do that. All right, thanks for watching, everyone. Talk to you tomorrow. Let me know if you have any questions, comments. Please like and subscribe. If you do nothing else, please hit that thumbs up button at the bottom. Take care.